I am late because I suck at computers and I deleted my cache and cookies and then I didn't know how to sign back in. And then when I got the alert on my phone or the secondary stuff, my kid had my phone and I had to hunt her down. So that took me 9 minutes to figure out. I really apologize for being late. Usually when I'm late, everybody, I'm only about 1 minute late. So here we go. What we're gonna do in this live stream is I'm going to take until about 20 minutes. So I'm going to be looking at the clock, 6:30 my time. So right now it's 10 past the hour. Till 30 past the hour, I'm going to cover Bitcoin because right now is a pretty tricky time. It's actually very, very tricky. Based off, we could get heavy flood down. We could get a fake out down for one last bull trap up, which is the least likely in my opinion. And then we could float sideways until an undetermined time and then flood down. So there's a lot of weird. This is a very interesting juncture where there's a lot of uncertainty in specifically Bitcoin, not stocks, but Bitcoin on macro direction right now. And once it sorts itself out, whether it's a fake out one way or the other or continuation, it's going to be really volatile. So in this Bitcoin portion of this live stream, I'm going to let you know more macro signals in a continuation of my last YouTube video. So if you're watching the recording of this, I strongly suggest to watch my previous video because I give you very specific things and why that doesn't mean continuation. So I'm not going to recover all of that, but rather I'm going to give you some other thoughts to work with to keep you a little safer from both a trading perspective and I guess, a Pokemon card, not financial advice, Pokemon card investor standpoint, which that means DCAing, right? DCAing, if you're somebody who doesn't like to click around through money, but DCA into crypto, altcoins, Bitcoin, whatever, it's this video will be pretty good for each of those parties because it could greatly affect you. And again, I cannot stress right now, Bitcoin is at a very pivotal juncture. Whatever happens, whether it's a fake out or not, or continuation, it's going to be volatile. And even if you see volatility one way, it really could swing back the other way. And I'm getting ready to show you why. And it's all connected to the stock market. Bitcoin follows the stock market. And Bitcoin is being propped up right now. And it's not going down as the stock market is making yearly lows. So let's dive into this. And I want to prepare you from a macro perspective. So I'm not going to dive into the small time frames. So new people, this is a perfect video for noobs who are, I guess, unaware without knowing it. This is a perfect video for them to say, oh, it could go up, could go down, could go sideways, great analysis. This is going to be a perfect video for that. But most returning viewers are going to already know why that's valuable. And I want to prepare you for that without making specific guesses. But I will let you know what I think is probable. So let's go get it. And again, in 2017, when I was new, in early 2018, I also thought it was stupid when I heard the few TA people, because almost everybody back then on YouTube was the news, like just pumping altcoin, right? Just telling their viewers what altcoins are going to pump after they already bought it. That's all that was happening in 2017, and for very, very, very few analysts in 2017. Good ones started coming in 20. All right, take a look at this chart, the monthly. We're going to start here. Quick summary is Wednesday through Friday of this week. It looks like we could get a strong continuation down. However, Wednesday through Friday specifically, any sharp move down likely will be met with a just going straight back from its breakdown point. But a move down Friday or after would very likely mean continuation down, right? If this October candle flips green this week, Wednesday through Friday, it likely means if it goes up, flips green, it likely will just go straight back down from where it broke out. It's not going to get continuation. So I'm essentially summarizing yesterday's video based off this monthly candle. But if after this Friday, this candle can flip green and the weekly will flip green at the same time, the current weekly candle and monthly candle, that increases the probability that we're going to have a move up to 21K target, which everybody and their sister and cousin are looking at that level, most of them for reasons different than why I'm looking at it. But there is a lot of, using fancy word, confluence or agreement across multiple different types of TA here. All right. Again, timing is so important right now, Wednesday through Friday, because of high impact economic data, namely CPI, PPI. And again, if that stuff is like stupid sound and jargon to you, that's perfectly fine. I mean, hell, I was in that boat thinking that sound. I didn't know what it was, and it sounded stupid. Just, I don't know, probably like 8 months ago, and it was mostly my VIPs educating me on all that stuff and how it gives me a better edge on the market. So right now, in general, based off the timing, there's a lot of uncertainty because any continued sharp move up or sharp move down, it's probably just going to go back to the middle. Very uncertain. That's one layer of reasoning why there's a lot of uncertainty right now, as Bitcoin is essentially falling off of a timing. But after Friday and after, that's when the certainty gets turned back to its normal dials in terms of, is it going to flood down, or is this going to flip green and stay green and do a move up to the upside to 21K? Mixing this with the stock market. So this, what I'm about to show you, I've been talking about on Twitter, posting. I've been posting this for a while, like probably since last year, right? And I've essentially made fun of the analysts on the news who talk about traditional finance more and who keep thinking the bottom's in and we're going to have a reversal and all that. And this whole time, let me go to, so this, what the chart that I'm on is called Nasdaq Composite Futures. And if you see this ticker right here, if you type this in, NQ1 exclamation, hit enter on Tradingview, you'll get the same chart. And I've been saying since, I think, I don't know, probably this lower high broke down. Probably, yeah, it maybe is only April this year, so not last year, but it's been months. Six-ish months that there's no way a bottom can be in because line A at bare minimum has to be hit, and it's actually going to be more likely this guy. Line B actually needs to be hit because it's dropping from so high that there's almost no chance that the stock market can bounce from line A. The only way that the stock market goes down to line A and bounces, which this is the most important line in Nasdaq Composite, this is the master origin line. So it like on Earth, it's the equator, right? And this line here is one of the tropics lines, and this here is the other tropics line at 23.5 degrees latitude from the equator, right? And so when you come up from too high above the A line and you come down to it, it always overshoots it. But that doesn't mean at first touch of line A that you can't get some form of bounce to create a lower high. And that is the key to add some, I guess, uncertainty on Bitcoin price because it's getting very close to the line. And it could form a small, I guess, not a reversal. It's not going to reverse here very likely. It needs to hit this line before it can reverse. Or before it has permission to reverse. Or you have some edge of looking for a reversal. But you could get a bounce where it just, goes up to here. Like, see this height here and height here? It could get a bounce and want to do another lower high before it then touches this line. And if you measure that up from here, that's a potential 12% rally on tech stocks, and SPX would probably do something to that effect as well. And right now and so why this is so important is because Bitcoin is outperforming this chart. by a mile. So for example, this right here is a new yearly low on stocks. Let me make sure in the comments y'all can freak. I'm pretty sure you can hear me, right? I'm saying, yeah, saying you can hear me, right? So this right here is a yearly, 2022, a yearly low, and this is a new yearly low put in today, as I'm recording this, this daily closure. But on Bitcoin, the yearly low was made back in June, and it's just going sideways. It's Bitcoin is and so because if Bitcoin goes sideways and stocks keep going down, that means Bitcoin versus the stock market, if you were to chart that, which I'm going to pull that up right now, it would mean it's in an uptrend. Even though Bitcoin's not really going up, it's just going flat as stocks go down. That means that chart versus each other, sideways versus down, if you were to chart sideways versus down, that would create an up angle, right? And that is what right here is. So we have a 51-day trend up. So because Bitcoin, let me go to like the 4-hour chart. Yeah, so this is a pretty established trend. And let me make some like my rainbows on it just so you could more visually see the trend, right? And I'll even take off price. So this rainbow is getting above one of the bigger obstacles, and look at price. I mean, it's using this as support, so it looks like it's easily going to come up here to this next to the next dam. So this is a river. This is dam number 1, dam number, or not dam, but like a levee. It breaks the levee in a flood, so it can flood the other way. And right now, this trend doesn't look like it's even close to being broken at all. Like it might just be getting warmed up, potentially. But regardless of trying to analyze this, the fact is it's in a 51-day uptrend versus the stock market. So now let me go back to remember that A line, the equator. What's going to happen? Because Bitcoin's outperforming it. When that A line is hit, right here, and you get a bounce, and Bitcoin's outperforming this, you could get a huge bounce on Bitcoin. And look how close it is. It could hit it this week. So if Bitcoin can stay level and just maybe even slideways down, it just doesn't go much below 18.5 or something. It's possible it goes past my 19K threshold. That's possible. But let's say it doesn't, it stays, between, it doesn't go below 18K as this is hit. And this gets that 12% bounce. What's Bitcoin going to do? It's going to bounce a hell of a lot. It's going to bounce more than 12%. A lot more, because that trend on the other chart that I just showed versus stocks, it is a strong trend. And it looks like it might heat up even more to the upside, right? So let's say that going back to Bitcoin here, and again, what I'm telling you, I'm not saying is the most probable. I want you to be prepared for it. Because it's, in my opinion, better to be bearish right now, both on the micro timeframes, mid-term, and long-term timeframes. Outside of these lines, Wednesday through Friday, just realize it's going to go up and down, up and down, up and down, and back to the middle. But beyond this, it's very likely best to be just bearish on all time frames. Micro bearish, short-term bearish, mid-term bearish, and macro bearish. Just bearish across the board. And I think, in a lot of my analysis is showing that. But I want to show you a compelling reason why you need to be prepared for that to be totally wrong. So what YouTuber have you ever seen tells you their best guess and then gives you compelling reasons why that could be wrong and tell you to prepare for it. So my bearishness could easily be totally wrong for like a 3 to 4 week period as Bitcoin rallies to 22K or about 21K easily. And that would be why, because Bitcoin has held level as the A line on stocks has been hit and then it rallies. That makes sense? But without that A line being there, honestly, I think Bitcoin would already be at like 15K. I think traditional finance, who is responsible for about 80-90% of trading volume on, not transaction volume, but trading volume on charts, spot and futures. I think it's very obvious they're propping up Bitcoin as the stocks are hitting some level down below. And I'm telling you, that's the line. That is what is happening, right? Okay. However, right when it hits that line, A line, it could just slam past it, and that's when Bitcoin just floods down. That's possible as well. So I honestly, I almost think that's what's going to happen. It's just they're waiting for traditional finance doesn't want Bitcoin to go too low too fast, and they're just waiting. They're trying to increase the momentum on stocks a little bit more, so that when the big flood down comes, Bitcoin isn't already at 14K. So that's holding steady, so that when the big flood comes down, Bitcoin has been holding steady and it can fall heavily from a higher point and then hit their targets where they plan to start buying and create the bottom. Does that make sense? Because Bitcoin was underperforming the stock market for so long. And so they're just essentially slowing the pace of the downside move for Bitcoin to prepare for the big sell-off. Because if they didn't do that, then their plans would be ruined, because some other person outside of their group or Bitcoin cartel, they would buy up a bottom that would hand control or more control to other big players to decide the bottom, right? Because it is somebody with it's a group or somebody with a lot of money on a market buy who decides the bottom. That is how it works. Okay, I mean, that's literally not always. Sometimes you'll get a long consolidation, like on gold or whatever, right? But on volatile assets, it is a big market buy that decides the bottom. And sometimes it's after a consolidation, but sometimes it's V-shaped, then consolidation, and that was the bottom. Strong market buy, right? So there are two competing theories here with that A line and Bitcoin going steady. There's a bearish interpretation. They're just holding it up because it will flood down, but they don't want it to flood down too far. That's why they're holding it steady. And the case for a bullish bounce once the A line is hit. All right, so I'm focusing on the bullish case here, or the bounce case. That chart is too messy. All right, so let's say that Bitcoin can hold level, like, this is the yearly low right here. So I'm on I want to go to the 2-hour chart. Let's go to the 1-hour chart. Yeah, let's do the 1-hour chart. And so this is right here, the yearly low on Bitcoin back in June this year. Stocks have been making yearly low, yearly low, yearly low, yearly low, and Bitcoin has not, right? And if it can hold, maybe even down here, maybe my 19K line is broken and it actually, hits down here, whatever, when line A is hit. If the stocks were to rally 12%, and Bitcoin did 12% or more, so that brings you back up to an origin line, and that's almost, can you see in the blue box that says 19.45%? That would be a 20% rally up to the origin line to get rejected by it. And this origin line goes back 13 years of price history. So this is as macro as you can go. Like, there is no more macro than an origin line. You can't, right? So these lines are a big ass deal. And for new viewers, I will just give you a quick snapshot of what it looks like. And again, origin lines are only found on my channel. I made them, and so I just go with it. Right? So look, the previous master origin line was, this is still the master origin line. But what is now the master origin line? It used to be the bottom. It used to be the bottom of everything. But right now, Bitcoin, honestly, it looks like Bitcoin's going to hit this bottom line. It goes back to 2011. Kind of looks like what's going to happen. And if that were to happen over time, that would be, a bottom of, see, if it took a few weeks to get down there, it could only be a bottom of $16,000, and that might be why the bigger players of traditional finance don't want this to go down yet, because they plan a bottom around here, and if Bitcoin were also making yearly lows, it'd be too close. And as stocks took a final capitulation down, then Bitcoin would go too low, right? Lower than what, the big bad days wanted. This is just a theory. Bitcoin could easily go below this bottom line, this bottom origin line. Really good. But that's a visual. But in the meantime, if line A is hit, it's perfectly acceptable and still macro bearish for Bitcoin to come up here and get a nice retest of this origin line before nice rally up before then coming back down to this point sometime in November. That's completely fine. In this setup, so this 20% move up, I need you to be prepared for that, as on my channel I've been ultra bearish. If you see the the equator line hit on Nasdaq Composite Futures, and again, I'll let you know, right? Hey, this is being hit, and Bitcoin hasn't taken a leg down. This is what you would want to be prepared for. Making sense so far? Short-term analysis, it's all the same from my yesterday's video. For people who didn't see that, I'm at about 6:30 right now. I need to end this portion, but if you want if you want the bumpers of what to look out for, and honestly, I can get rid of that. If you want to know what Bitcoin will be interacting with in the short-term time frame, especially during Wednesday, Thursday, Friday of this week, because it will be volatile and it's just going to go both directions, right? It's just going to up, down, back to the middle, up or down, up, back to the middle. Let me try to put on my chart what you. I would say you will want everything that I'm getting ready to label. These are all the things that are in play, and they are. Where's the September? Right there. So everything on my chart, right? Is the weekly tenant play? Let's see here. It might be in play. Let's see. Might be a little too high. Maybe. But for the sake of this, I think everything on my chart right now, which is either labeled by a price box or by words, right? Right here. So Friday at 10 a.m., everything between this vertical line and this vertical line, if you see violence to the upside, that won't be continuation. If you see violence to the downside, it probably isn't continuation. But the closer you get to Friday and or beyond Friday in this direction, if you get violent moves down, the chances of continuation in that direction are increasing as you get to this point, right? But on Wednesday and Thursday, if you get violent move down here, there's a stronger chance that it'll just go straight back to the middle where it broke down. But the closer and closer you get to here or past, if you get a move at that point, strong move down, then the chances for continuation in that direction are increased. So this line is in play and this line is in play. You need vertical lines on your chart because most of everything between between this line and this line, it's likely fake outs. All right, but after this line, very likely continuation or somewhere close to this line. And then from a horizontal standpoint, you need the September candle open right around 20,000, The October candle open is going to be a bumper. Price will interact with that and move. It'll pivot some way, right? And then you need the daily 10, the 4-hour 10, and these two boxes. So let me zoom out a little bit so you can snapshot this and you could try to replicate it. I could probably get rid of this. You could maybe get a wick down there, but this is more. These are all the things that are most likely going to create pivot points and be the bumpers. Like, price hits it and it does something. But between these, price will just go straight to the next one, right? And there is a possibility that Bitcoin, it does fly above the 4-hour 10. And if it does, well, then you're probably going to, interact with the October candle and the daily 10 at the same time and get rejected. And to go above it, you have to form a higher low. And if that happens, then you're looking at 20K. And if it happens between these two lines and 20K is hit, guess what's going to happen? It's probably going to come straight back down to the middle. So just use this. This is your guide. For sure. And don't forget the importance of these vertical lines. And if you want to see a more in-depth analysis on this, then look at my Bitcoin video from Monday, 10/10, October 10th. And that's the Bitcoin portion. Hopefully you find this helpful, and hopefully you understand why it could go up, could go down, could go sideways type of analysis, and it's very important because you can get your ass kicked from between this time axis. You just get slaughtered. Especially if you're pissing around with leverage. You can get so slaughtered. So money that you don't lose because you're prepared for wicked shit to happen, that's money you win. And that's why the analysis of could go up, could go down, could go sideways is so important that noobs don't understand. All right, that is Bitcoin. Let's move on to Ethereum. Ethereum is very weak. My Ethereum analysis really, Ethereum is pretty weak. In general, it is a hell of a lot easier to play than Bitcoin, but it likely is not going to be good to play or strategic to play in a counter trend trade to the upside. It is underperforming Bitcoin. It doesn't look like it's doing anything bullish, and it's being rejected by this red line, the 4-hour 10, and it looks like it's getting ready to fall deeper into this trading channel you can see behind me. And this is a good time either on the live stream or recording. If you're new, go ahead and subscribe. Hit the subscribe button down below for seeing pretty charts that are going to give you great guides. And if you are new and you hit subscribe, hit the bell for all alerts so I can keep you in the know on your crypto price action for Bitcoin, Ethereum, and your altcoins. And then returning viewers, this is time to hit the like button here. So Ethereum is going to be easier to play to the downside, in my opinion, because it's in such a nice, beautiful channel. It is underperforming Bitcoin. So even if Bitcoin has a nice move up, the move up on Ethereum is likely not going to be as aggressive, and it will likely just, the most I could see it really doing is a large failure pattern above this line. If Bitcoin were to go up, 10%, maybe Ethereum could go a failure pattern above this line, up 6%. But I think that any fake out during Wednesday through Thursday of this week, because of the high economic impact data, the whales just like to go up, down, back to the middle. I think each of those spikes will be smaller. So the volatility up, down will be smaller on Ethereum, unless it's to the downside. Then downside moves might be more vicious on Ethereum, right? But Ethereum is just in this channel. And so if you want to try to make Ethereum look like this, I'm on the 1-hour chart, and this goes back to August 6th of this year. And these are your bumpers for Ethereum. And if to layer anything on top, I would simply add the 4-hour 10 for now. It's getting the right direction. If price on let's say the 5-minute candles. Just take a look at this, watch. So this is still the 4-hour 10, even though I'm on the 5-minute chart. Look, price got above the 4-hour 10. When it came back down, did it use it as support? Got above the 4-hour 10. When it came back down, did it use it as support? Came back up. Did it use it as support? It arguably, but no. These candles closed below. Went higher, still didn't use it as support. Went even higher, didn't use it as support. So therefore, this was just a bunch of failure patterns. Like it never used it as support, and it never made a high higher than an initial high getting above this line after using it as support. So the exact moment that you can say the micro time frame will go up on Ethereum, perhaps then going back to this green line here, is when you can see price both get above the red line or the 4-hour 10 and use it as support. So let's say it gets above, uses it as support, and then you get above the first high you make one of the first highs you make getting above it, or the highest high before it was used as support. So you don't have an edge to micro time frame to the upside until this right here is shit. That was not the climactic event that I wanted to look for. It's as this moment right there as it passes this, but it has to use the red line as support. And then after it uses it as support and starts working its way up, you simply look left, and you don't have an edge to the upside until the highest peak is passed after support. But in this level, and so I'm showing you a perfect example of what is not support. None of this was support. So for example, when Ethereum, see how this height went above here, but the reason why at that moment you did not have an edge to the micro time frame upside to trade up, for like a 2-hour trade to the upside. You did not have an edge because there was no support on the red line. Make sense? Is it possible that it does this in the future, comes below it and just skyrockets up? Yeah, but you don't trade off. You trade off probabilities. All right. And once again, went above the red line, but did it use it as support? These are 5-minute candles. No, it didn't. So did it go pretty high? Yeah, it did. But when it came down, it just fell right through it. And then when it came back up to make another high, it was extremely statistically probable it was going to be a lower high, a high lower than the previous one or this one being so aggressive. It never used this as support, and it couldn't base off of it. And all it did was hit the top of the channel. So if you see something like this happen again on Ethereum and it hits that channel line, but it has not bounced even on 5-minute candles, like it didn't go up and use it as perfect support, closing candles on it or above it, and then go up. If you don't see that and you see Ethereum hit the top of the channel, maybe within a 2% range above it, so maybe not exactly, but within 2%, you can get failure patterns about 2% above the top of a channel. It's very likely going to go straight back down. And so this 4-hour 10 EMA, it helps you understand better the probabilities of using the bumpers. It just is an extra layer of protection for you, protection in form of probabilities. It helps you understand, yeah. So what's the probability of it just hitting this and coming back down? Well, take a look at how it reacted to the 4-hour 10. Did it use it as support and then blast off? Well, then you actually have an okay chance of price, working its way up above it. Maybe it can go like this, and then shit, maybe I need to scramble out of my shorts, because when I look back at the red line, it did base off of it. So maybe I'll get a pullback, but once it starts creeping back up and I see it based off of this, shit, I need to get out of my short and take profit now and just scramble out, because it's probably going to break out. Not probably. It has a better chance of doing that because of the way it interacted with this guide here, 4-hour 10. So using the 4-hour 10 in these bumpers on Ethereum is really all you need right now until it works its way out of this. But if it keeps going down and sideways, you're going to have these bumpers for a long ass time. The only way these bumpers are going to come invalid is if it breaks up and out of it. But right now, it sure as hell doesn't look like it. But again, Wednesday, Thursday, and Friday, expect just rapid volatility going like 3% above this line, then back down. Like it could get really, really wacky. October 12th, 13th, and 14th. Just expect wackiness. But after that, then the rules of how price interacts with this, the 4-hour 10, which is the red line, and the bumpers, then the rules go back to giving you the probabilities. That's all you need right now is this trading channel and the 4-hour 10 for Ethereum. And honestly, Ethereum's way easier to deal with right now than Bitcoin, because Bitcoin's being propped up and it's just chopping around, and Ethereum's got a more slideways down fashion, and it just looks a lot easier, particularly to short right now. Much easier than Bitcoin, and that's all you need for Ethereum until this line is broken and used as support. And this was extra helpful. Please go back to this beginning of this video if you're watching the recording of it. Try to draw those lines, even if it's not as sexy as my chart, which you probably won't be able to make it as pretty as mine. I think it's perfectly parallel, but just try. It's going to offer you a good guide along with the 4-hour 10 EMA. And in order to do the 4-hour 10 EMA, you need to search for an indicator called MTF EMA. And that you're looking for MTF EMA and put on the 4-hour 10, but put it on like the 5-minute candle. That's how you're going to be able to get yourself that edge. It's really all about that 4-hour 10, but not looking at 4-hour candles, rather like 3 and 5-minute candles. That's how you're going to get short-term time frame edges. All right, let's start looking at some questions. And, for anybody who didn't hear me say this at the beginning of the stream, I just got done telling my whole Discord community this. And, because it's going to be so weird Wednesday through Friday, I feel I need to say the same thing for YouTube. just free content, is if you're somebody who's learning how to click around with your money, or you already have learned, but you're just not in a groove with the market right now, which is probably myself right now. I'm not in a good groove, but how can you be in a groove with choppiness, right? The best play would be to have seen Bitcoin dominance going up and realize shorting altcoins is the way to go right now. But I didn't identify it fast enough. That would be the only way to not be playing around with the chop, and I didn't fast enough. But anyway, regardless of what type of person you are and how you would label yourself in your crypto journey, Wednesday through Friday this week, it's an extremely heightened chance that taking no trade is the best thing you can do, and literally sitting flat. So flat is like sitting on cash, sitting on Tether, or a stable coin, or just your fiat currency within your exchange, or taking everything out, like just flat position, no position at all. That might be the way to go. And don't feel bad or weird about think about it this way. If you're trying to make money from the market, you always want to take the best trade, right? That's simple to think about. But just realize the best trade might be not to trade. And this Wednesday through Thursday, it might be the case. With the understanding that you always want to take the best trade. So don't hesitate just to freaking do nothing and watch the chaos. Like that's probably what I'm going to do on Wednesday. I think I'm going to try to play the chaos personally on Thursday with the CPI data. So I want to see how Wednesday dust settles, and then from which point does it base? Where does price find itself at about 7:30, about 8 a.m. New York time on Thursday morning? And because the CPI data comes out at 8:30 New York time, or 5:30 a.m. California. That's kind of my game plan. So I'm sitting out from now till Thursday morning. I'm doing nothing. And in retrospect, when I go into the future, like on this Saturday, it's totally possible that I'll look back and say, shit, on Thursday I should have taken no trades. But I'm still planning on trying it. But I do know that there's a decent possibility I'll look back in time and say, shit, I should have done. No trade was the best trade. All right, here we go. Questions. Where do you see Goldfinch protocol going the short term? Well, I think everything's going to go down. You said short term. Okay. Likely down, but let's go look. Goldfinch. I've never even heard of that. It's on Coinbase. Okay. Well. And they have it on the dollar pairing. Really? So watch out for this. This is not very well traded. So whenever a chart looks like this on small time frames, it's because there's no volume. It's all bots. So watch out. Yeah, this looks like it might be delisted soon. If it's this poor of performance plus very, very low volume, Coinbase is likely going to delist this in this bear market. I would say it's going to hit this trend line soon. And before you get a reasonable bounce, not a reversal, a reasonable bounce, this was a bounce, but then it came straight back down. This was a bounce, but then it came down lower, right? I think right here. This trend line is pretty much it. So until then, you're likely not going to be able to look back on. So this is the daily candle. So you won't, any move up, so before this trend line is hit, any move up, you can likely look back in time. Let's just count back like 3 daily candles. And the highest point price has made in those 3-day look back, let's say tomorrow's a green candle. You just fairly safely assume that any daily green candle will not go higher than the highest price in the prior 3 days candle until that's hit. And when this line is hit, that's when you have a much greater chance of a bounce going above the highest price of 3 days looking back. That's how I would play this. Now, in the meantime, though, but looking, so from current price, so 1, 2, 3, that could be a tradable move, right? That's 12. That's 13%. You could. That's extremely tradable, even on spot price. But that would be my guide. And so, I mean, if I could guess where that's going to hit, it's not going to be one level. It depends on when it hits it. But if it hits it soonish, 62 cents. If it hits it a little later, 56 cents. But I would say it's going to hit it kind of soon this month. I would say around 60 cents, 60 to 62 cents. But just look at the chart and draw this damn trend line. That's it. That's where it's going. And that's how I would treat that. All right. Alex videos. Yeah, but Alex, thanks for being a community member. Just realize that when you're looking at this stuff, so one of my bigger embarrassments as a YouTuber, as a lot of people on here know, is Viacoin. And it what caused that embarrassment was I failed to anticipate trading volume mixed with the incentive exchanges have to have a coin on its platform. Platforms are there, exchanges are there to make money. They are a for-profit organization. And if a coin is not trading and the company and exchange is not making money from it, it actually, there's overhead or there's a cost to, keeping the wallets updated and all that stuff. And it actually is unprofitable for lower trading volume coins to remain on an exchange during a bear market, because it's just, and mixed with the exchanges are already probably losing money anyway, right? And they're trying to get through the bear market. They're going to look at their P&L and try to get rid of and axe everything that is a red line. And that's delistings. So just realize, this could get delisted, and it could make a big stink for that asset. I'm not saying I'm guaranteeing that, obviously, because I'm not the Coinbase CEO, but be ready for that, because that did happen to me, and I did not anticipate that. And I can just tell by the way the small candles are. There's almost no trading volume. No one's trading it. I would say almost all of this is just the Coinbase bots trading wash trading. Almost all of it's wash trading. If not like 98%. They could get rid of it. Watch out for that. Okay, hello Tim, great content. I want to know which of the two has more potential for downside. Cardano. I need the one that will suffer the most. Shorts, low leverage. I don't know. My gut would say Cardano, but Cardano hasn't done terribly this bear market. Cardano's down 88%. Polkadot's down 89. I think Polkadot, honestly, it looks like Polkadot's getting ready to drop now. I would say in the immediate term, Polkadot, because it's more on a cliff and it hasn't fallen off, and Cardano has. And this has yet to accelerate. So, but from their height, they're both down 88, 89%. So they're kind of equivalent there. But for the bit better immediate gain, it's similar to chasing green candles in a bull market, right? So most retail people, they're only interested in things that have gone up 5,000%, because that's why YouTubers talk about it, because it's been up and it's hitting it's just what's hot. But that's when you want to sell, like, right? And so that's chasing green candles. Like people who are buying after a $5,000 rally thinking it's going to $1, right? When it's at like, 5 cents and a market cap of 10 billion already. Because they don't understand what market cap means. They just think it can hit $1 for no reason. Because mathematically challenged inside their brain. But it's total noobs. That's chasing green candles. The only reason I would pick Polkadot over Cardano for that specific question for the month of October. So the shelf life of my answer is probably just the month of October, and maybe in early November. I would only pick Polkadot because you would be chasing green candles a little heavier on Cardano, and I think you can get in. You have a better chance of getting in a nicer short before more aggressive red candles happen on Polkadot. Making sense? Now, is that to say market sell right now and like all your capital? No. Like it could easily hit the top of this box first, right? Or even spike above. And how big of a percentage would that be? Yeah, and on 5x leverage, that would get you down 25%. So if you shorted with $1,000 right now, you could easily be down $250 within a day. So I'm not giving you a trade signal, but that is my answer and all the reasons. And my precaution to make sure that my words are not being interpreted as a trade signal. All right, evening, you withered. I'm a withered. All right, can I have your 2 cents on Ferrum, FRM, and what you think Mana bottom targets? Yeah, I have. Okay, Chris. Hey, nice to see you back. I think I already have Mana. I'll start with Mana. Mana bottom targets for this bull market. I believe I've already done them. So let's see if I have and if I still agree with them. No, maybe I haven't done them on Mana. Okay. All right. Well, behind me are origin lines. And I haven't looked at Mana in a long time because most of my origin lines on my new charts are brighter colored. So you can see it a little bit better. Like this. Something to effect. Change the color. Oh, buddy, it will. All right, here, give me a sec. And now what we're going to do is we're going to take a peek at price and how it's, I guess, sustaining or living and moving within these general guidelines. So the brighter ones are essentially the middle of the chart. You see how 2 of them are bold in the middle? So let's say that that's like cutting the cake in half. Top half, bottom half, middle zone, like a point of control, right? And this is from a macro perspective. So I'm walking you through just what I'm seeing here. And then maybe I want to extend these. All right, I'm going to extend these bad boys. Oop, I didn't think it was. Okay. I'm almost done. And then I'm going to line this up with horizontals and then a raw percentage from the top. And in addition, I will throw on vertical lines for the time axis. So my time axis guess is going to be crypto, or at least Bitcoin. Maybe not altcoins, because altcoins historically, and listen to what I'm about to say, even if you're not a big Mana fan. Last bear market, altcoins bottomed about 500 days after Bitcoin bottomed. Even Cardano bottomed about, it was like 500 days after Bitcoin's bottom at 3,200. So these lines are kind of more in line with what I think a Bitcoin bottom could be. So anything I say, just be prepared that it could be, you might think my guess is too low, but if this bear market's anything like last bear market, what I'm about to say is guess, it could be way too high for that reason if history repeats itself, which is not guaranteed. But I'm going to give you a guess of when Bitcoin bottoms and where this will be. Just realize this could go even farther, a year later, and deep into like February 2024 or something. Okay. Can it get there that fast? It can. Okay, so the average slope of all this downside movement, I still have these lines here from when I was trying to warn people after this. It's coming, but these lines are lower, and all the Mana fans were like, "You're an idiot! You're an idiot!" And then I already knew it was going to happen with a high probability, so I even made a follow-up video trying to explain to all those people why it was going below these lines after this line was hit. Oh, and I left them on there for good memories. Oh my goodness. I'm gonna keep them on there forever. Yeah, I even made a follow-up video for those people. Oh god. So the average velocity with which this is falling aligns with I think you have a few options here. I would guess one of these three numbers are pretty damn good guesses for a 2022, 2023 bear market guess for Mana. And again, I need to be exceptionally clear. You might think this is way too low, right? But be prepared that these numbers are probably going to be hit. And then Bitcoin might rally or do some consolidation for a year, and maybe this goes up 300%. Doesn't matter. But there's a strong possibility that once Bitcoin makes a macro higher low, this goes a lot lower. Like half this number, 50% lower than whatever it hit here. Right? So, I mean, that means this could go down to like freaking 13 cents in 2024. I don't think 13 cents in 2023 is going to happen. But, well, this is only February of 2023. I guess it could happen, especially if Russia and Ukraine stuff doesn't help. But barring black swan events like weapons of mass destruction being used, that stuff doesn't happen. Knock on wood. Yes, I actually had some real wood right next to me. These are the three numbers for Mana and all the reasons why. Let me see how big of a drawdown that would be from top. I would say that should be about 98.5%. That's pretty reasonable for something that got way overheated. Oh, that's only 95%? Fuck. Yeah, these numbers are very likely going to be hit then. And they might be too high. So any asset that moved like this, I mean, it's more likely going to go down 98%, to be honest with you. But it won't happen soon. So let's say just 98% from the top. Does that align with structure on the... So if well, that's this bottom one. All right, so 98% aligns with this wick, that wick, and all this support. So late 2023 through 2024, do not be surprised if this box right here is hit. And is that around 12 cents, like I was thinking earlier? No, it's even lower. Shit. It could go under 10 cents. but I would say that would be deep into 2023 or early mid 2024, and that would more likely happen after Bitcoin's bottomed and it's gone sideways for a year or whatever, and then Bitcoin takes one more leg down to form a macro high or low. That's when you could hit under 10. It would be over a year from now. Okay, and that's what we got for Anna. Yeah, that was fun. This one's this hasn't gone down as far as what I thought, but it's very likely gonna. Only down 88%, not bad. And then what was your other question? FRM. And because I recorded that, now I can do some clickbait for the recording. Like, what is it? Yeah, mana down to 8 cents. All right. This one looks pretty normal. You're gonna want to just this. So use a rotating rectangle. Watch. Just do what I'm about to do. A rotated rectangle. If you can look over. Oh, you can't see it over here. There we go. All right, so look over this way. So 1, 2, 3, 4 down. You might not see the signal there, right? But if you go this way and expand it, you're going to want to do the rotated rectangle. And if you do that, just hit the damn star. Once you hit the star, then it'll pop up on this bar and you can move it around, right? So all this bar is my starred stuff. So you want to do a rotated rectangle and go like. Actually, I think I just nailed it on the head. So I don't want the top of the rotated rectangle here or here, I think, because this looks like when it went above the range. I think these were bull traps. Yeah, these look like, yeah, this looks like these went above the range, I think. And I'll be able to tell a little bit better once I drag this down and make it the point. So, I'm not for sure though. But we're going to be able to tell here in just a second. So literally just you can go back. So I'm not recording this, but this should stay recorded within my live stream section. So you're going to want to go back and just do what I'm doing. I don't know. I think I kind of like it better with this being the top of the range. I think it makes the point of control makes more sense. Yeah, I like the point of control better using. So I'm not interpreting this as a bull trap. Usually I don't go that route, but here it just makes more sense. I think the chart will be sexier. Right. Is this going to be symmetric still? Yeah, perfect. Yep, right. Yeah, this is a very nice point of control. All right. And you're probably going to need 2 or 3 lines between. I'm going to make that 1 point, boom, dotted line, dashed line. And boom. Yep, you need 3. This is a big range for this. So it's in a it's in a macro range. Can we get by with just 2? Yeah, I like just 2 better. All right. And then I'm going to select those, holding control So see how they're selected down? See those blue dots? That means they're both selected. My pinky is on control. Drag them down. Everything stays perfectly parallel and perfectly equidistant. There you go. That's it. So this is all you need for this. And then throw on the 4-hour 10 MTF EMA for your general direction, and then go down to the 5-minute candles. And you'll be able to read this, similar to my Bitcoin analysis. You can better understand the probabilities of rejections, on spikes up for the bumpers by understanding how did price interact first with this 4-hour 10 EMA. That's it. So I would throw on, and maybe just throw on the 4-hour 10 and the daily 10. Ooh, you're getting ready to have a nasty bearish cross. This is getting ready to go down. He could have one more spike up, but after this cross is going to be, so it's headed towards 2.6 cents. And again, you could have a significant spike up before that happens. So I'm not saying straight down to there. Don't short like right now or anything, even though you might not be able to short this. But that's how I would play this chart. That's fair. Wondering if we could take a look at target lows for KCS and Trias again. Yeah, sure. Let's do it. KCS. Gonna look for target lows for bear market KCS, and just realize that the exchange coins, I mean, since their inception, they've been a pretty freaking solid play from a DCA / investor standpoint. I'm not claiming much from are they great to trade? What were all my projections here? How did I do? Let's go back. I don't even remember doing this. Let's see. Let's see how close I was. So I started making my guess back here, and the closest one was probably these were all the options on how it would behave around origin lines and that wasn't too bad. I almost got that almost exactly. That was pretty freaking close. Yeah, that was so I was using back here the weekly 10 and this origin line how it would behave. So I throw in the weekly 10. It was probably like creeping up to it or something. What? No, it was not. I just based off this origin line. That wasn't a bad guess, but then again I did make 3 guesses. Okay. Bottom targets. So these have been pretty good plays historically from a DCA perspective. And I do have some personal interest, like throughout 2023, to start getting into some KCS, and for the benefits it does, because I enjoy the KuCoin, especially during altcoin bull runs and Bitcoin bull runs. KuCoin is like the place to be. It is the place to be. All right, I would say and see this is when Bitcoin bottomed, and technically this coin also bottomed at the same time, because this is higher and this is a higher low, but it still just went. I mean, look how long this was. But Cardano made a new. That's 680 days. but it didn't go lower. That's what I was talking about for main. A lot of coins just go lower. That's on after this long consolidation. That's over a year after Bitcoin bottoms. You likely get a long consolidation that spikes down. I'm trying to figure out, do I think this bottom origin line was going to hold up or not? So what I'm going to do to try to get a better guess, just structurally, it kind of looks like it will, but I need to add some point of relativity so I can better manage my guess. So from top to bottom, an exchange coin, I don't think they're going to go down 98%. I would guess between 92 to 96. That's bottom line is, by the time it gets there, it's only 80%. Ugh. Maybe, but that I don't think that's probable. So I'm going to add some origin lines there. I don't think that. In most coins, if you take their bottom origin line, like what it was the bottom, most of them are way below it. Even Bitcoin is 4 origin lines past what the bottom used to be, right? On the origin line perspective. So it's not like bad. It's actually kind of strong right now. This asset's holding up just honestly really, really well. This is kind of impressive. It's only down 70%. I would say this is a better target over time. And that's still only down 88%. I would. Is it going to fall off a cliff? It's got to fall off a cliff to get down there. What is it? It's holding on to something. I can't tell what this is holding on. It's being defended. And again, this could be KuCoin's money itself, like holding up its own coin. This might not be actual investors doing this, but even if you were to make claim, then an exchange is using its own flat position to protect its native token. Even though I'm not making that claim, it's a possibility. They're going to do it off technicals, and even in that case, they would stop doing it if that technical is broken. So I'm trying to see where it's the monthly closures. So the monthly closures right here and right here are being defended. So once those are broken, that's when whoever or whatever groups, or even just mass market psychology defending that, then you're going to accelerate down. Not all in one day, but rather the general trajectory, because the slope of this average descent is not that steep. So look, this is what I'm talking about. So that slope is this steep, right? But after this line, you're going to get it's not going to be here. It's not going to keep that slope. It's going to go down faster. That makes sense? But it likely won't happen until after that line. After 750 is broken. It will be the same hour it's broken? No, it could go below it, use it as, use this. So price could go below this bad boy, then come back, use it as resistance, consolidate resistance, and then flood down. It's not all at the same time. But in general terms, around 750 is your pivot when bulls are going to stop defending this bad boy. And then let's go to February of 2023, just a guess of Bitcoin bottom, like another capitulation, all that happens. I would guess 315. There you go. Next year. That would be my guess. For bear market bottoms for the bear market of 2023 for KuCoin. Trias. Asking about Trias. I will do both. Just kind of update. Are my target bottoms still looking good? But I'll do some more short-term price action as well on Trias. Haven't covered Trias in a little bit. I think most of the Trias geeks who are saying, "Oh, this is going," like all that. I think most of them are realizing or accepting the idea that if you like an altcoin, you need to stop rooting for it to go up. Because if you like it, you want more of it. And how do you get more of it? With the same amount of money, the price goes down. Like you can get more apples if apples cost 5 cents, right? And you only have $1. But if apples cost 50 cents and you only have $1, you only get 2. If it costs 5 cents, you get 20. Oh, my line has finally been hit. So most small caps should go down 98 to 99%. And again, not picking on Trias at all. It's just what you should expect. It's just the way it is. Like even like my chest pound coin, like B Pro or something, right? Which I still am interested in that. And I'm trying to spot trade it for accumulation. So right now I'm holding a flat position, right? Because I sold into a rally. I'm just waiting for Bitcoin's next leg down, and then I'll wait for some bullish divergence on crypto after a couple waves down, maybe over the course of 2 weeks, and then I'm not gonna necessarily go for it. It might be a higher low, but you can do this on Trias too. Right. It looks like so 90 overall, 98 to 99% down. I had forgotten this did have the double top too. Yeah, my guesses are pretty good. 28 cents isn't too bad. And by the time it hits that, it could be 28 cents over here at the top of this channel. So it is totally possible that this macro channel, Trias never goes back into it. Rather, it only flirts, like its capitulation moves or down moves. And actually, a lot of cryptos are doing this. Polkadot's doing this. Phantom, maybe Phantom broke back in. Cardano, Chainlink. So Chainlink is like out here like this right now. They step a little higher outside of its macro range. But a lot of coins are likely going to use this as its new support. And then essentially what you're dealing with is like it's almost like a double decker, like something like, you're dealing with something like that. You just like do a double decker, and this is the top is the new bottom, right? And that is November of this year. So, and if you do end up having black swan events that drive down stocks and crypto a lot farther, because crypto and Bitcoin is being treated as a risk on asset. And if something weird happens with global war and weapons of mass destruction, Trias will go back into this channel and maybe hit the bottom of it. And, if a black swan super negative event happens, I mean, you could be looking at pennies, like 5 cents. But I think you would need a black swan event for something weird like that to happen. But just, it could happen. So be prepared. It could go back into this channel. All right? But without anything strange happening, I think the top of this channel line is looking pretty good. So from a time perspective, maybe 37 cents is pretty freaking reasonable. Pretty reasonable. And short-term price action, most of everything, all you really need are your channel guides and the 4-hour 10 right now until you get some type of a decent sustained bounce up. And then you'll just throw on the weekly 10. Then, if you get a sustained bounce up, then you're just doing weekly 10 up here. See the red line? So this guy is the weekly 10. But right now, that's way out of play. You would have to go up for, like, at least for that to be back in play. It would have to be, no, I have to go to sideways for 2 weeks. So, yeah, but right now it's out of play. But if this were to bounce here and not go down for a while, then you're going to have the daily 10 in play. But to deal with Trias on the short-term time frame, I mean, it's going to be hard, or anything. And listen, if you're not a Trias fan, listen to what I'm about to say. Right now, if you could just have even just basic horizontals, or if you go fancy with tilted ranges like me, trading channels, just a no-brainer way. 4-hour 10, daily 10, and weekly 10, plus your bumpers. Like it, you literally could keep it that simple exceptionally well. Exceptionally well. Because you're not distracted by, oh, a green dot and a red X, and because you're going to be able to see it with the basic tools that you have, right? Like breaking one of your major supports or something, as the daily 10 is, crossing below this, and then it squeezes price down, for example. You'll be able to, you can see the same things with basic supports and bumpers, whether that's horizontals or channels, plus basic EMAs. I promise you, you can see the freaking same things. And that involves money flow and everything. All right. The only thing it doesn't really get is leverage ratios. Leverage ratios are kind of their own ballpark, but that doesn't apply to Trias. So I would say, I don't know, it kind of looks like it's due for a bounce. Honestly, once it hits this, as long as Bitcoin is above 18,900, you can get a decent sized bounce off this over time, not all in 1 hour, but it could go, over a couple weeks and go back up to 90 cents or something. Let me see. I think after this, you could easily get Trias. Yeah, about 90 cents. And how big of a move would that be? It's only 13%. And by that time, the weekly 10 would be here. And if that were to happen, then it could do a failure pattern above it, maybe go up to like 96 cents. And that is after 80-cent horizontal has been hit. So that's long-term and short-term price action for Price. Yeah, somebody says make sure to hit the like button. Tim's giving free info for what other people charge for. Yeah, I mean, that's true. So what I charge for on Discord, particularly Discord, is, so right now it's not a very safe trading environment, and plus my ability to be in front of a computer to manage short-term time frame trades, it's not as good. So I'm not doing many alerts, but plus any trading alerts, it's just chop anyways. You're probably going to get chopped up. But what I'm charging for right now, or what the offer I'm offering is live interaction. Like, you come and ask me freaking questions on Discord with your microphone and turn on your camera and flip me off if you want. It's like, hey, douchebag, I've been wanting, you haven't answered my direct message in a month, which is probably the case for a lot of people. But you just come on. Like, I have a schedule, I post it, and you come ask me a question with your microphone. And sometimes people, usually cameras only get turned on when we have green candles. We haven't had many cameras on outside of my own on Discord, probably for a little bit. But still, we have really good discussions on there, and also on Discord, I have a lot of trade setup hunters, and they post their ideas, and on one of the futures channels within my own Discord. So even though I am not giving a whole bunch of trading alerts during choppy consolidation points, you have 50 minds are better than mine. In addition to being able to come on and say, hey, I'm looking at 10 different people with different ideas. And you can come on the Discord live show and ask me, well, what do you think about this? Without even telling me where you got it from. I can just, or where should I put my stops? Or I'm at a loss. Should I bail now? A lot of people ask me, those are pretty typical for in the money type of stuff. And the way I structured the Discord stuff is I try to do a quick summary just to give people idea of what I'm thinking. And then we do money on the line questions, and then if once we get through those, then we just talk about whatever we want to talk about. All right, so But yeah, I am giving away a lot of free information on YouTube. In light of a lot of other people who used to do similar stuff, they I've seen a lot of channels watered down, on particularly YouTube, not talking about their Discord and paid for stuff. But that could be because the same people are concentrating other value for paid for services. All right, here we go. You gonna talk about dollar hitting resistances, alt pump soon? No. Alts are probably better for shorting right now. The Ethereum merge news, like mid August to mid September, that was it, man. That is not going to happen again. Most likely, I could be wrong, but extremely probable not going to happen until after Bitcoin bottoms. And even then, before like a 200 to 300% rally on alts would happen, it would probably be a good 90 days. So remember Wyckoff pattern after Bitcoin went from 55K to 29K? There was 95 days of like slideways down action, right? From May, June, July. Like it was July 21st, 2021 when it zoomed up. I think it was the 21st of July. So it was like 90 days. So you at least need 90 days after Bitcoin bottoms. And Bitcoin might not bottom for 90 days. So therefore, it could be 6 more months until even the beginning of the next altcoin rally. Honestly, that's probably a pretty good guess. I think about the earliest that you're going to see a decent altcoin rally is probably 6 months. And I'll show you a chart. Like, look. And you'll be able to tell the moment where it becomes more probable that I'm going to be wrong on that guess, just by looking at the chart. Just Bitcoin dominance. Look. Check this out. I'll go to the 4 hour. 4 hours, not enough. I will go to the daily. Yes. All right. So take a look. Looks pretty bad, right? But we're going to zoom in to this part. And now I'm going to go to the 4 hour chart now that we have the context of this. Maybe even the 1 hour. Hour. Yeah, 4 hour looks pretty good. And take off price. So look at the rainbow versus the gray and blue line. It looks like it's racing up to it, right? So over here, looks like it went like the actual value. Yeah, it went way up here. In order for the rainbow to get this high above the gray line, that means it was blue, like by a mile, right? But then again, it didn't base out here. It was a V shape, so it wasn't sustainable, right? This one based out a little longer, and it was able to run up higher, right? This one is the third touch on this, and it's getting a nice. So see how much slower this progression is than even this. So look how it went straight up, and then it caught itself and then went sideways. But this one is going. It's saying, "Whoops! I fell off a cliff. Let me get back on it." And immediately go sideways, as opposed to going way up and then come down sideways. This is healthier. So it looks like this has a better chance than even this run. Like this could be the beginning of something equivalent of this. And honestly, it has so at this snapshot in time, even though in retrospect, it obviously, is locked in. It happened. It's 100% because it's in the past. Like it happened. But if you were in this exact moment, after it zoomed up, came down, based out, let's say even based again, in this snapshot in time, before the rest of this happened, at that time, the probabilities of getting a decent continuation move on Bitcoin dominance versus alts, at that snapshot, it was not as good as what we have now. So the chances now are better than then, and even then, it did work out. That's not to guarantee it will work out, but I mean, this chart it's probably getting ready to go up in a sustained move. And I'm telling you, the only reason why this weirdness right here happened was the Ethereum merge. And remember what I said? What dates did I say? Middle of August and middle of September. And that's over, right? Remember when I said that? And I said, I'll show you on the chart. Okay, look, I will mark off August 15th, 7th, 15th, I guarantee this dip is somewhere in the middle. Watch. Can't really see him very well, can you? There you go. That was it. And now that that's over, it's forming an even stronger base. That doesn't mean Bitcoin will go up. Sometimes this chart, this Bitcoin dominance chart, goes up the fastest when Bitcoin is tanking. But it only goes, this chart goes up because altcoins tank faster. That makes sense? So yeah, I think altcoins are going to get freaking messed up here soon. Like, I think they're going to get. But during that Ethereum merge, the trend was starting to change. Like, it looked like this bear market might be led by altcoins, but it's very clear that it was only because the Ethereum merge, and it's over. Yeah, altcoins are getting ready to get destroyed. They're gonna get so screwed. All right. Flux is below my target. All right, let's take a look at Flux. Actually, somebody is saying it went below my target, so let's go to it and figure out, was I off there or is it just going below and I need to reevaluate what is happening? So let's go to Flux. I probably need to. Yeah, it's just on its way down to 62 cents. So, all right, Flux has now broken below the origin line that I thought it could get a bounce from, right? But I had this labeled from my last video. Like, I think eventually it's coming here. So it just didn't get a bounce in a lower high before coming here. It's just going, it looks like it's going straight there without forming a lower high before getting there. That makes sense. So there's a couple ways. There are a couple main ways to approach a resistance and go below it to hit a support and break below it to hit the next support down. Option one is you have price come down and bounce off of it, but that bounce is a lower high than what previously happened. And then when you come back to touch it, then you fall through. Or as you approach it, you just fall through. And it did the second one. And, yeah, honestly, I think this is the target right there. Is that going to be a bear market low? No, I'm not saying that'll be its low forever, but that looks like its direction. And remember, in most altcoins right now, the main thing, I'm surprised it's really starting to accelerate down. This is what's Bitcoin doing right now? No, it's still at 19. This is kind of surprising. So Flux versus Bitcoin chart, if this is versus the dollar, that means Flux versus BTC is really going down. Huh. I wonder why it's doing that. Oh, you know what? The Flux versus Bitcoin chart is actually more important than what I should have been covering this, folks. I think this is responsible for its acceleration. So you have people's bots trading this asset versus Bitcoin pairing in addition to its dollar pairing, and that's what's causing the dollar pairing to just go down. So partly my fault. I did not look at Flux versus Bitcoin. Oftentimes I don't look at that. But yeah, it's fallen off of the Bitcoin pairing. So this is Flux. Can you see the letters like where I'm pointing? FLUX. This is Flux versus Bitcoin. And in order to have anticipated the dollar like falling through that support, you would have had to have seen it on this chart. Without this chart, you wouldn't have been able to correctly guess it's going to bust through that. So yeah, Flux versus Bitcoin chart is very important right now. And if you're a Flux fan, you need to be watching it. Yeah, I missed it. So now, I guess you can sort of rely on the dollar pairing because people. So the which pairing moves price the most? It doesn't ebb and flow. Right now, it's obviously Flux versus BTC is moving the Flux versus US dollar chart, but it can switch roles, right? Almost like a handoff. Like I'm tired of running and taking charge. Mommy's taking a nap. You go deal with the kids, right? Like my life, and your turn. And so I think spot price will have its turn to take control of the overall price once this is hit, and it would most likely create some type of balance. But right now, I guess Daddy's taking care of the kids and shit's burning. That's kind of what's happening right now. And so if that were to be the case, then I think that trying to time a Flux hitting versus BTC, it could actually time perfectly. Like it might hit support on both at the same time, but I would lean towards Flux's support being hit on the dollar pairing. I would rely on that more. But a lot of times it just really does align. Thanks. So if Bitcoin goes sideways, Flux would only go down 13% versus the dollar from current price. Boom. There you go. 13%. Yeah, that's the target. Yeah, so it's going to bounce on both of them. See how it says 13 right there? That's exactly right. Now, here's the thing, though. There is a heightened chance of Flux driving right through there and crashing through that if Bitcoin. So during Flux's move down on its so this is the dollar pairing, but on its move down on the Bitcoin pairing, if Bitcoin takes a leg down to recheck 17.5 while the Bitcoin pairing is correcting to that box, it greatly increases the chance that this is it's going to fly through below this. But it also has the chance, right, to it could create it so that you get a bounce on the Bitcoin pairing. So not this chart, but the Bitcoin pairing chart, and therefore the dollar pairing does take control, and you get it just stops here as Bitcoin is still falling, and this just goes sideways, and that would make it versus Bitcoin go up. Like it does a V shape on the other one. That's possible too. But you have an increased chance if Bitcoin starts going down during this move. Whoo! It could way overshoot it. It could way overshoot it. And I want to I want to make very clear that thought because there might be people watching my channel on Flux for a while, and I'm targeting 61, 62 cents. And if you're going all in on that shit and you're not aware that you could get smoked if Bitcoin heads down during this move, I mean, you're probably gonna be mad at me, right? So to some degree, even though I'm not giving you financial advice, I'm just telling you what I see in the charts. But I'm trying to protect you from having a reason to be mad at me. So be careful with that. Don't be silly and don't go all in and don't sell your house and buy Flux at 61 cents. Not financial advice, but please don't do silly, aggressive stuff at that level. Is it a good time to be interested in picking it up? Yeah, hell yeah. I personally probably will. But I'm not going to bet the house and I'm not going to do anything crazy on it, right? And I'm going to be staying aware the whole time of what Bitcoin price is doing. Because if right before it gets there, Bitcoin starts falling off a cliff, well, then I'm deleting my orders and I'm going to wait. I'm not going to buy it right there. Right? So just keep an eye on Bitcoin once this gets close there, please. Like, please. All right, that's Flux. All right, I'm going pretty long on this. I haven't gotten through all the questions. All right, mover. Okay, so gosh, I'm not gonna get through. Damn, not even gonna get through all the community member stuff. I want more apples. All right, mover. I mean, just keep the number $4 in mind. Just keep that in mind. Yeah, $4 to $5. That's going to be an area of interest. Okay, not financial advice. Don't go all in on there, but $4 to $5 is a target of interest. It's an area of interest for mover. If I can just be really quick with it, Acero. Ugh, it's only on these three, so be careful with this one. Well, it actually doesn't look that bad. This one's honestly. Oh, it only came out in July. Okay, that's why it looks. So. So this is following Bitcoin, which means Acero versus there's got to be more price history though. Yeah, there we go. Honestly, this is a lot stronger than what's the market cap on this? This honestly is it's down 80% from its April highs. Still, I mean, I don't know what to think of this. It could. I mean, I would lean bearish that this is being defended, and similar to, I can't remember what coin I was talking about, but if you take the average slope of its approach to this and you interpret because it's above this, people have more of a reason to be a buyer, to add buy pressure to the equation. And once it goes below this point, then that reasoning to add buy pressure or to hit market buy or to have limit buys down low and thicken up the order book to make it harder for market sales to go through it. Whichever way you want to interpret that, it's probably both. But anyway, once this is 83 cents is broken, then the slope of this will likely accelerate to the downside. That would be that would be one interpretation of this. However, it also is possible, that I mean, the way this is looking, Bitcoin goes down 34%. What would that be? That'd be 12K. Honestly, it is possible. I'm not saying 50% chance. This has got a good chance that it already bottomed. I would give it at least 1 and 3. Yeah, because it's following Bitcoin. It's performing just as strong as Bitcoin. If Bitcoin goes down to 12K, this would still be the low. It wouldn't go past that. But just remember, the acceleration to the downside could increase. I would give it a 2/3 chance that once this is broken, then it increases to the downside. But there is a solid possibility, like a strong possibility, not probability, that the bottom's in. So these would be my two options. Yep, either it just does a double bottom and the bottom is in, barely, but the bottom's in, or the bottom's not in, and what's holding stuff up is 83 cents. And then not necessarily people won't start selling harder, It's just people won't buy as hard, so the same sell pressure will make price go down faster, even if people aren't selling anymore, right? Yeah, this one's honestly, that chart is in good shape for now. Much better than most of everything out there. Atom, I mean, I've covered Atom bear market targets. It's off my way. Ooh, it broke below that origin line. Ooh, so it's time. Yep. So this. Okay. All right. You can see an Atom price. You can tell Bitcoin. Okay. All right. A very quick Atom video here, recording this portion during my live stream. Atom price is essentially the perfect visual of Bitcoin price, or no, of Bitcoin dominance going up. It's perfect. Look. So Atom has been very, very strong, moving in an uptrend between a couple origin lines, right? And now that it's finally, so let me zoom in on this part here. So this goes back to June of this year, right? And the timing of all, let's say from here to here, this is 157 days. From this point to this point, 157 days, general uptrend, right? Now that its base has been broken, and this has been one of the strongest performing alts out there on a trend basis. Now that it's over, like it's done. The uptrend is now over, and you can tell from these origin lines, and because Atom was among and still probably is, right? It's not like Atom's done forever or anything like that, but when the strongest, almost like Amazon or Tesla or whatever, they're leaders of Nasdaq. This is even maybe even more so than Ethereum. Atom is like an altcoin leader. It's probably going to be one of the first movers come the beginning of the bull market. Yeah, Atom's it's the real deal here, and I can see it in the charts. I don't know anything about it fundamentally, but I can tell in the charts. Like it's not just trading pressure. Like there is investor pressure up. But anyway, so but because this has been among the best performing alts out there in this bear market, now that it has crossed that point, you can see very clearly this is the moment where Bitcoin dominance is going to begin trending up. And we already looked during this live stream. It is, and I showed you with my ribbons and all that. You can see it visually, even if you can't just stare at charts and tell. So that's why the rainbow's on there. Like this is a perfect indicator. It finally broke below there for the second time. Now is taking out the low it made, and it's going down to the next one. And that means Bitcoin dominance is now ready to go after Ethereum merge, shenanigans with altcoins, because altcoins were doing way too well for a bear market. It's all because of Ethereum. Now it's over, and because essentially the altcoin leader is now broken below this. Ethereum merge over. Atom now trend is done, or the uptrend is over. Bitcoin dominance is going up, and alts are. Honestly, this is a really good indicator that alts are getting ready to get their ass kicked. Yeah. Now, when alts are getting their ass kicking, Atom will probably fare a lot better than the vast majority, maybe even better than Ethereum. I'm not gonna lie. Atom's real. Its chart is freaking impressive, everybody. Like this is some serious. And just like a couple of very few coins that I've gone over, but it's been a few. Atom is one of those assets where it has among the strongest chances out of any altcoin to have already bottomed. There is a decent chance, and the chance of this one, it's probably above 1/3. I don't know. Maybe not 40%, but close to 1/3. Like there's a damn decent chance that this is the low. And in that case, it could do a double bottom type of deal, right? So, like, let's say over time, it comes to this origin line over here. Like this guy. But it doesn't hit it until... It doesn't hit it until December. That's still the same price. And so that doesn't mean go short now, like it's a 54%. It's not going to all happen in one day, right? You could have one more pump up, a nice, especially this week. This week's going to be nuts. You could have another failure pattern above here. And if you're trying to short now, like that's 8%. And just on 10x leverage, you're very close to getting liquidated. You'll be 80% down. very close to your liquidation level. 15x, you're liquidated if you try to go short now, right? And you're not using stops like a smart person. It can easily get messed up if you're jumping on what I'm saying now on Adam and trying to short. I'm not giving you a trade signal, just overall thoughts. This has a damn good chance to have bottom. But the more important thing I believe is going on here with Adam is that it is a market, it's an altcoin leader. It looks like the total 2 and total 3 charts are getting ready to take a strong leg down within 30 days. It's probably going to happen by November, the middle of November. It's getting ready to. It could happen this week. And you can see it right there. So, yeah, this is an interesting. Just realize that Adam is a market leader and use it as such until it's not. All right, that's Adam. Yeah, Adam's badass. Quant, let's see if it's still going up. All right, Quant's been on a nice tear. I haven't taken a look at it since last week. So let's go see what it's up to. Damn. She's still going. My God. I don't know. That's pretty impressive. I think it's got another spike up in it. It looked. I haven't looked at any bearish divergence yet, but I mean, to me, it looks like it's gonna want to check. Looks like it's gonna want to check 185, 180 to 185. I think 180 to 185 looks. Yeah. Even if this corrects down like 10% or something, even if it comes down to this. So let me zoom in now. Even if Quant comes back down to this point here at $130, I still think it's got a near probability, like 51% chance of still hitting 180. This is a pretty strong trend. However, that 128, this area here, this is going to be, around 130, 128, somewhere around there. So just draw a box there. Right? Once Quant has gone back below 128 to 130, if it happens in the next month and a half, then the run is over. But, and not on a wick basis. Like, it could wick below, and if you see it get right back up in there, then it still has a damn good chance to come up to 1. But I wouldn't say there's a probability of the trend being over, the uptrend being over, until this is taken out and it uses it as resistance. And even after that, it could form a head and shoulders pattern, or in more realistic terms, the first lower high. That's all a head and shoulders pattern means. With symmetry and volume signatures, but it just literally means that it's the first lower high. So even if it does come back down here, something to this effect, if it doesn't use it as resistance and like keep falling, so it could go below there, but you need to focus on how it comes back up to test 128 to 1. So it could go like this, boom, and if it gets right back in there and bases, well, then it's probably coming up to here, or even up to 150, but somewhere in this area, and then it's going to do this, and then it'll probably break down. And so even if it goes below 28 to 130, it could easily form an aggressive lower high with a 22% move up. So watch out for that. But honestly, this looks so aggressive that as of right now, this snapshot in time, it is more probable that 180 is hit before 128 is hit. This is a freaking strong trend. You only have one. You have one big strike. So let's take off this. So you have one big, so both one share. Let's do this. So this is the 4-hour EMA of RSI. So these are like your cycle, your mega strikes of bearish divergence, but it's only the 4-hour. They only have one of them. Sometimes on a strong trend, you can get like 5 strikes of 4-hour, EMA or mega 4-hour bearish divergence. Sometimes it's only 1 or 2, but since it only has 1 strike of bearish divergence on the EMA of the 4-hour RSI, it's it's gonna hit 180 most. This is impressive as hell. Now, if I were holding Quant from a spot price, not financial advice for you, I personally would be a seller there. Like, as in 100 bag it, and I would wait for lower prices. Maybe buying up a higher low, but however, from a future standpoint, on leverage, if you're trying to do that kind of stuff, I don't know how safe of a short target that is, because it could be an area that everybody's looking at, and there's a lot of liquidity made by liquidations and stops, and it goes like a 8% spike above, and then it comes back down. So, but on spot price, as in spot price meaning you're actually buying one quant. You're buying quant, not an IOU of futures, right? On spot price, I think it's, in my opinion, if I were holding this, I would personally feel safe selling into a rally up to that. But I personally would not feel super safe going aggressively trying to short there on leverage. That makes sense? There is a difference. Now, is that a possible good point to do it in retrospect? Yeah, it could be if you're trading futures. But why would you? I mean, something that is ignoring a bear market so far and going up, I wouldn't want to try to find a top and short it. You're just going to lose money. The likelihood of losing money trying to short a top on an asset in a strong uptrend that's ignoring a crypto bear market, why even try it? But on spot price, trying to sell into a rally to buy back on a higher low or later on, that is, in my opinion, would be a smart move. All right, my wife's coming here, which I'm way over. All right, I did not get through everybody's questions. It is what it is. We'll see you back on Thursday at 6 p.m. I won't be 10 minutes late because I won't have cleared my cache and cookies and not realize how the hell to get back in because my logins and all that stuff. So I will see you at 6 p.m. or 6:01 p.m. New York time on Thursday. Don't hesitate. If you like this kind of stuff and you're not a Discord community member, you might want to check it out because Discord, you can hop on and ask me questions with your microphone. So we don't have like a time limit with all these questions on the side. Just hop on and ask me freaking questions. It doesn't matter if it's look at this chart or I'm at a loss, what should I do? Or I'm new to futures, how do I start? You can hop on Discord. For the YouTube tiers, it's similar to the Cryptillion tier for Discord, but without the ability to turn on your microphone and ask me questions. You don't get the live interaction, but the content, the daily content, is pretty damn similar. And I record the Cryptillion chats, the live chats on Discord, and I supply the link to that recording for the Cryptillion YouTube tier, which is the higher of the 2 YouTube tiers. And then also for the YouTube tiers, you get first dibs on me answering your questions during the live show. But people on Discord don't need that because they just ask me on their microphone, right? So